Pulling up the recap 600 call down here, close at 1166. That drawdown to 730 with entries right around that 750, 770, 780 was the right thing to do. The high was 1350, now currently printing at 1080 by 1120. That's the update on that $600 call. Here's the update on the equity 607.55. We traded down to that 600.7, but before they did that, we had to start from the 613 reversal down to that 600.70 penny handle. And once again, how do you confirm price volatility? It's very simple. The following day, like today, is you have that downside reversal volatility mathematically, just like you had the previous upside day price action volatility within a mathematical pricing script. Let's take a look at this 595 call. Closed at 1620. The high was 1730 though. But look at the markdown at 1030 with a big entry. So what if it's still negative $2? They're worth 14.75, 15.20, and taking those entries at that 1050, 1070, 1090 mark, and then selling them back to the public in here for ringing the cash register once again, having that heavier volume entry at the right time at that wholesale bid, as long as that bottom gets put in and that upside volatility is $7. There it is. And that's going to take the 610 put back into play. Most importantly, let's update it. That 605 put, yes, it got to 880. Yes, the low was 320. The close was 520. They marked it down to 320 and then marked it up to 820. Now they've marked that 605 put right back to $5 by 530. That's why I always tell you, tomorrow will come again, and there will be a fat trade again in this particular name. If you're not selling up here at the highs and taking your profits, you don't get paid, and then you end up in this kind of situation selling down here. And this is the reality of the 605 put today. Yes, it is. And knowing when to make that transaction and those profits. Otherwise, they reverse off of these highs and you end up like this. But we don't teach you to do that, because we don't. Therefore, I will say that the 610 put is going to come back into play. But look at it. Look at it. They had a close at 730. They marked it down to that 490 on that opening bell, but then they ran it. Look at that there at that 1210, and now printing back at 730 by 750 on that bid and ask. Now let's do ourselves a favor and let's talk about the reasons why, and I can show you why in one moment. What we're doing is that we can see that we're getting that net short, but they took that open up there to the next level of resistance and rolled it over. And that's how the price volatility to the downside works. That's why they have to be managed, and profits, you have to take them. You don't take the profits when they're up here at 880 like today, then you end up in this kind of camp. Doesn't matter what you think or what you feel. Price dollar movement ranges from 320 to 580 was a big payer. Big payer. Okay? And the transaction is over. The calls are paying big from 1030 right here. That 595, they shook it down. They shook it down to $6.10 to wholesale. And now printing at 1510 by 70. High was 1730. That's his call right here on Google. So both sides of the market are wonderful transactions. Doesn't matter. Buying these calls here. They drop them from 1166. That's a 600. They take it to 600.70 here. They take the call to $7.30. Take a look at the shakedown 1166. They shake it down to 730. That's where you take the ownership. And then you sell it up here at 13.5. We do it every day. That's the call side. So when you look at call and put side, your 595 call, 600 call, 610 put, it's $2 off the low still. That was wholesale. This was wholesale. The 610 put was wholesale. Look at the range. Look at the close. Look at the low. Look at the high. $7.20 range, MMT. Here's that 605. Still off of the lows. Look at that. But you have to be a seller at the high. That is the special preview that we are showing. we will show the Google chart in reference of the 3-minute intraday levels and how they shake people out and how they rally them up. And right here, let me do the diamonds. You can see right here is the short. Right up here at that 613 and straight down. And if you don't take profits when profits are here, what happens is they'll bounce, they pull back, they bounce, and they can pull back. But look what happens. Once that thing gets going, your whole put side of the market was peaking. The put side of the 605 was at 320 and the high, and it traded from 320 to 880. And you can see how it dropped, but once it made that bottom, it was tradable after there. But look at the breakout now. This is where the call side works. The put side worked here. The call side, well, you can take a pass and you'd sell into resistance and get out. If you don't get out, you don't get paid. If you get out up here, you get paid, and you buy back down here for the bigger side of the run going long. And that is MMT. That's this side of the market. That's the 595 call and the $600 call that you see right here. 1170 by 1180. Nice move off of those lows. I've already covered it. I'm just showing right here that we have rallied all the way back up here. And now, Rick Goley, look at the 610 put. It's down here at 680 by 710 on the pullback with the diamond reversal. Put bids out there right now at $5.20 on 5, if you would, just in case he wants to walk it up. Yeah, but he could reverse it in here, because when you take a look at it right here, let's take a look. We're right here. We're right here at these diamonds. And the thing about it is he's going to have to push it up there. If he does, that means that 610 put will drop down in value to 520, and you would get hit. If it doesn't, we're still $2 off, little less than $2 off the bottom. See how much of the high we've had? Over 100% reversal almost. Look at that, Rick Goley. 730, they drop it to 490. What is the real value? It's still printing. 670 is printing below 730, Rick Goley. That was a close, Rick Goley. 660 is a bid, Rick Goley, to 730 with the reversal. And what do you have? That's exactly what. Ooh, well, look at this bar right here. I got to open this thing up. Here, we're all live right now, so let's just do our analysis in order to get those prices. So this half bar right here, Rick Goley, is 608.11. Where are we at? 609. Yeah, so we're above this half bar right here, Mr. Goley, that I have my pointer on. And in order to get these at 520, Mr. Goley, we have to break higher up in that teeny line and get that wholesale bid on that entry with all of that capital risk taken out of that side as ring the cash register, ring the cash register. That 595 call is working its way higher. Not only that, I've got a $600 call working off of that low with a 1350 high and a 1240 ask approaching the high at 11:25 a.m. Pacific Standard Time. 5/8/2012, making a market on both sides, buying the call at the wholesale bid, and when we have this big reversal intraday right here, then the put side worked off of the bottom at 320 to 880. You have to know to sell at the highs. If you don't sell, you don't get paid. They reverse. You have to be selling on the high of 1 and buying this 1030. You end at 10, like I said, you got a $5 yield. So it's been a pleasure, and it's been a damn good update. And 605 put is coming back down. That means that these are tradable tomorrow. And I can tell you what, if I can get that bid down here between $1.50 and $1.80, if I can get a gap up and a run on that one, I'd be looking at the 605 somewhere right around, let's say, $1. I'd like to get in around $1.30 by $1.70. That means that this would have to run higher in price, so that this price tomorrow, if they get, see, look at that there, if they come back up and break that high, they would take that 605 down there to that price. The 610 put, yes, I'd love to steal this tomorrow morning. I would. like to steal the 610, and let me tell you something else. The 615 might come into place as well tomorrow morning on a gap up sequence. MMT. Let's take a look at that put. There it is, MMT. The high was 1560. It closed at 970. You got a shakedown at 730 and then a run for $8 to the high. And if you don't sell up here, when you have that reversal and you get wholesale down here and you have the trend reversal work in your favor, such as this. So look at the low here, and that's when that thing went straight down intraday. When you got down at the bottom, that meant that this hit the highs. And when this went up, the value from here has come all the way back down toward that 940 by 970, and that's a 615 put, 511 weekly expiration. That's going to be tradable tomorrow for that big ringer. Ring that cash register based on that support and resistance and supply and demand. I've got a reversal right now at 1128. At 1128, I'd love to steal this bid right here at about, let's say $4.70 to $5.50 bid and ask range, 950 by 990, 50 by 90, 40-cent spread. How do I buy in the spread? Come here and we'll show you how to do it. Remember, once again, there are all kinds of opportunities setting up in all directional price movements, both the long side of the market, with the call side of the market, and the short debit side of the market. That's the high, like 613 down to 600. That's, close enough to $13, $12.30. And that's how your call and puts will trade. And be in wholesale here and selling back at the high. Tomorrow, like I said, within the ranges, there's all kinds of wonderful wholesale entry opportunities, both on the 595 and the 600 today. Another thing we'll do, I'll tell you what, since that 695, let's go over here to that $600 call. Notice that the $600 call, again, let's go to the 605, 610 call. No, we'll go to 605. 600 is below it, but 605, 610, 850, that's what I thought. So 610 is only up 40 cents, but the low was 307, so you got a 580 by 6, and if you're getting 100 contracts at 320 or 350, they did go from 307 to 780 on the 610 call. And it's recorded here and now for trade management, market maker entry management systems. On the 610 call, on the other hand, let's take a look here at making a market on heavy volume. Say there's 200 contracts at $2, between $2 and $2.20. There was still a $3 move on that 615 call from that wholesale drop down. You can see that the close was 356 down to that wholesale bid on that 615 call because they ran it to 613 here on the name where the pointer is on Google, which in return peaked the price at 510. Now just take a look at the low, and that's the yield still. And that's another great trade. Down here was $15 above the money. But when that thing rang the cash register and had the reversal now, again, using your 3-minute chart, your MMT platform, it's right here. And that's resistance and that's reversal, MMTs. Isn't that nice and genuine? Because it is. So therefore, you have one teeny reversal. 2 would be here, 3 is here, 5 is going to be down here where the base of that last breakout was, and 17 is down here in your MMT platform is going to be right here. So let's take a look. We're at a 66. You are negative 0.44. You're at 0.9, 0.35, 5.16 is 97 cents a teeny, MMTs. And you can see where the reversal was. So you have to cash in the puts here and buy the calls here and take the call side of the market. And that's buying the call side at the low prices on heavy volume because you get paid here. And same thing over here on the puts though. Buying down there at that 320 and selling up around $8, $7.80. On the top end was going to be $8.80. Then you had $7.20, $7.50 area, $6.90, 6.5, scaling out up into it. And that's why you take your profits. You buy the calls when you're at the bottom and look at the breakout here. See, $1.85. So there are trades available. Let's just get back to the 605 call and let's monitor this 870 by $9. 480 is a low. 860 they mark it to 480, but then look what they did. Ran that up to $11 when that put in that support level. Buy a lot of volume here for that call side, Brian Plain. Ring that cash register. There's